Hello and welcome to this week's episode of the Scottish Property Podcast. My name is Stephen Clark and I'm joined as always by my co-host Nick Ponte. How are you, Nick?
Yes, and we're pretty smug today, Stephen, because unlike everybody else in the country, we haven't had to queue for our petrol because we've got electric cars. Woohoo! Have you been seeing that? It's mental.
It's nuts, mate. Yeah.
Panic buying, just like the toilet roll again.
Craziness. I can't get my head around that, but yeah. So this week we have got Kessar Salimi on the podcast. Now, Kessar Salimi is no stranger to the Scottish Property Podcast. We've had him on a couple of times throughout lockdowns. He's been on Zoom calls. He's always adding his value from his mortgage broker's point of view. But what a lot of people don't understand is Kessar's a property investor seller. He's actually got property investment experience to pre-2008 crash, and I think a lot of the stuff that he talks about, he's got a lot of experience and he shares a lot of knowledge as well, doesn't he?
Yeah, no, I put him on the spot as well about, interest rates, because everyone's talking about potential interest rates rises because of inflation at the moment. So, but halfway through, I just landed that sucker blow and he was like, I don't know, I can't talk about that. He did talk about it, but obviously they're regulated and they've got to watch what they say as mortgage brokers. But it's interesting to get his view on that as well.
Yeah, absolutely. And Kessar's going to join us as one of the hosts of the Scottish Property Podcast networking events. He invests heavily in Dundee, so he's going to host a Dundee event. So we thought it'd be good to get him on and listen to his point of view from his investment journey rather than just his kind of mortgage broker experience. So without further ado, we'll cut to the interview with Kessar Salimi. Kessar Salimi, welcome to the Scottish Property Podcast again. Now, a lot of the listeners will be familiarised with you, or familiarised with yourself, but can you give a little introduction just for those that haven't?
Yeah, thanks, Stephen. Thanks, Nick. Thanks for having me back on again. Kessar Salimi, I'm a mortgage broker, property investor. Been investing since pre-2008, and then really kind of started to ramp things up sort of 2010 onwards. Super passionate about property investment, and sort of financial freedom was my main goal for getting into property investment. Delighted to be on today.
And good, and that's the reason why I want to get you back on, is because we've had you on Zoom calls throughout lockdown as well, talking about, your experience as a mortgage broker and lending conditions and what's changing and stuff in the market and that. But, it's important to for people to realise that you're a property investor first and foremost. And I think that's not covered a lot on your social media journeys, because a lot of the stuff you're doing for marketing is for your mortgage brokerage business, isn't it?
True. Yeah, and absolutely right.
So yeah, let's start back, because one of the main reasons as well I wanted to get you on this, there's not a lot of people that we chat to and discuss that have kind of got the experience that have seen pre-2008 before the crash. And I think that's really important, because obviously if you've been investing in property for 10 years, you're considered an experienced investor, but you still haven't seen a crash. So could you take us back to the start then? How did you get started in property, and what was it like before 2008 for you?
Yeah, okay, fine. Started investing in property when I was 19, actually, so 2004. But sort of wasn't really kind of looking to invest myself. My family background, from a Pakistani sort of background, and a lot of sort of Asian people like investing in property. So my dad was kind of investing in property, and he said, look, you should get one as well. This was kind of 2004. Things were starting to kind of ramp up on the way to kind of 2008. Everybody's kind of looking to invest in property. So saw a nice kind of 2-bedroom flat for me to kind of buy. I bought that and just rented it out, really. It did really fine, but I actually kind of sold that in 2006, and it kind of went up in value by about, I only bought it for, I think, sort of 40 grand, and it went up to about 60. So it was kind of a nice bit of profit on that one. But as a kind of a family, we was investing in property quite heavily, where, they were kind of allowing you to kind of refinance on day one, get all your money back out, and then go again. So really, that's kind of what my dad was doing. And we had kind of a restaurant business at the time, and we was kind of working there and investing all the money into property. But then sort of the financial crash came. He used to bank with Clydesdale Bank, and they basically said to him that, look, we're not comfortable with the mortgages anymore. You need to go elsewhere. But the problem was nobody else was giving finance. And unfortunately, my dad just didn't know what to do, just kind of put his head in the sand a wee bit. And then the whole lot just got repossessed offers, so we kind of lost everything. We lost all the properties we had, commercial property, everything. So a lot of lessons learned, kind of grieved for a long time, because I felt like most of the early 2000s, I kind of felt sort of, I was kind of slugging away trying to invest in property, and then we'd kind of lost it. But a lot of lessons learned as well, and kind of that's a key thing for me, for even the property investors I'm helping now, to hopefully not make those mistakes like I made.
No, there's so much to cover on that kind of quick little bit. Because you're very much similar to myself and Nick. Similar age bracket. Started investing at a very young age, in 2004, 2006 as well. So a lot of comparables that I kind of see from our own journeys. Let me take it back as well. What made you kind of sell the first flat then, the 2-bed one you bought in 2004 and told in 2006? What made you, like you said, it was going to be property investment you were doing. What made you decide to just flip on for a bit of profit?
Yeah, to be honest, I wasn't really that educated in property at the time, so I didn't really know what I was doing. And I saw the market sort of increasing, and my dad was kind of getting into more developments and stuff like that. So we thought it'd be a good idea to kind of cash in on this one when properties were kind of increasing. But in hindsight, I should have just kept that one, because that was one of the ones that I actually rebought that recently, surprisingly, not from the same person that I sold it to, and it was just by accident. But yeah, I should have kind of held on to that one. And actually, kind of the developers and stuff, they were kind of what basically made us a loss, really. But yeah, just not being educated, really.
How much did you buy that one back for?
40,000 again, interestingly.
I love stuff like that. I love looking at
random, where it was a property sourcer that brought it to me, and I didn't even realize it was the same property. We went and walked in, and it's only when I walked in I realized it was the exact same property. So I think it was 2015 or 2016 when I rebought the property. So it's interesting to see that prices didn't actually even recover that much in that area over the last 10 years, and just starting to recover now.
Yeah, absolutely. And it's Dundee that you invest in predominantly, isn't it?
Yeah, so I live in Dundee, invest in Dundee as well. So we did have kind of quite a peak in prices kind of from 2006 to 2008, but since then they've kind of stayed fairly steady and only started to kind of increase quite a lot over the last year or two. But up till then, price increases have been fairly steady, to be honest. Yeah.
Yeah. So can you just explain to listeners who weren't obviously investing that time, what was the actual problem? Why so many properties were getting repossessed around then? What actually happened?
Yeah, I think a mixture of things, and everybody's always got their own story. For us, it was the commercial lender that we was with, Clydesdale Bank, and RBS and stuff did this as well. Where basically they were just not comfortable with the loans anymore, and they were calling them in, asking you to kind of refinance and go elsewhere. And a lot of business people, not just kind of property investors, even just like people who had businesses and stuff, just couldn't do that. And then that's where they were getting repossessed. And RBS, obviously, there was a kind of big controversy with them. And I've known some property investors that have actually done well out of it, where people were writing off debts, and they were able to kind of refinance and go elsewhere and get hundreds of thousands or millions of pounds kind of written off debt wise. But unfortunately, I didn't think we kind of had the know-how on how to do that. And so yeah, we just kind of lost a lot at that time. But there's a lot of protection now in the mortgage market to kind of stop that from happening again. It's not to say that this can never happen again, because you've always got to be careful. But back then it was the Wild West. You can kind of refinance day one, pull all your money back out and just go again. Sounds crazy now, but that's what was available at the time.
Yeah, that's interesting, mate. And at the end of the day, it was a financial crash. It was a banking crisis, and it all kind of stemmed from lending and these bad loans and these toxic loans that were all packaged up and all to do with mortgages and that. So like you say, it is very different, I think. And to see something like that happen again, it'd be kind of hard to see.
What have you guys done since to recover? Because you kind of ramped it up, a couple of years after this. How did you kind of regroup, get educated, and kind of go for a plan of attack moving forward, kind of yourself and as a family?
Yeah, it's a good question. So I was actually kind of slightly put off by property after that, and I felt I was kind of moping around for a couple of years, thinking I kind of lost everything, and didn't know where to go from there, and then just started basically saving back up. And property prices were quite cheap, kind of 2009, 2010. And looking back now, I didn't really kind of know what was going on, but that was kind of like the bottom of the market. And the mortgage broker I was using at the time, he said, kind of showed me the options of what was available, and there was quite kind of cheap flats available, sort of 40, 50,000 mark. So it was only kind of had to put about sort of 10,000 of my own money to kind of invest. And it was actually my wife that said, let's start investing for ourselves. We had that sort of 10,000 saved up, and then bought the first one, and it kind of snowballed from there. But at that time, it's a different market to what it's like now, where we was literally the only kind of viewer at the property, and we can kind of bid a decent sort of price, completely different to what it's like now, So looking back now, if I had the money, it would have been great to buy a whole lot of properties, but it was nice to kind of start with the one, and then it just snowballed from there, just buying one a year, and then from the rents that we had, that kind of snowballed to us allowing to buy 2, 3, and then kind of ramping up from there.
And so do you just collect the rent then and add it to the next kind of deposit to invest in the next property?
Yeah, and to be honest, at that time, I wasn't really that clued up on sort of the buy, refurbish, refinance and stuff like that. And also I had the full-time job too. So I was just looking for properties that could rent out from day one or needed very minimal work. I could put my 25% deposit in, and then that would kind of give me the cash flow. So like the numbers I was working on back then was sort of the 40, 50,000 sort of flats, and they were renting out for sort of £350, £400 a month. My mortgage payments were less than £100. So it was a decent amount of cash flow to kind of get me started. So I was kind of looking for kind of the buy and rent out straight away, really.
Before you kind of started to move on and started to ramp back up your own property investment, what kind of lessons did you take away from that period then?
I think the mortgage market's kind of dictated that for me slightly anyway, with the fact of putting in higher deposits, the rental stress test, stuff like that. I probably didn't realize at the time that's, that was to our benefit. But I think kind of the whole sort of regulation in the market has kind of helped us as property investors. But I suppose for me personally, lender diversification, using lots of different lenders, not going with one of these sort of main high street banks because I do have a few loans with high street banks just now, but they are on reviewable terms as well. So after 5 years, they can basically call that loan in if they don't want to kind of proceed. Whilst with the buy-to-let ones, I've got terms for kind of 25 to 35 years. As long as I kind of stay within sort of the right loan to value, it's very unlikely that they'll call those loans in. So I think for me, biggest one was lender diversification. Don't kind of have all my mortgages with one lender.
That's good. And you kind of touched on that as well. Like obviously it's been regulated a lot with the bigger deposits. You can't refinance on day one. Do you think it's obviously made the entry level for people entering property investment quite a lot higher, hasn't it?
Yeah, it definitely has. Yeah, but also I think it's kind of good for us as property investors because it's protecting us going forward. The rental stress test as well, which can kind of really hit some kind of property investors, especially when they're buying higher value properties. But ultimately, I do think it's a good thing. And it does protect you in the future if interest rates do rise as well, because we're so used to low interest rates now as well. That's the big thing.
Yeah, that's another point actually. Yeah, we've been historically low interest rates for the last 13, 14 years.
Yeah, definitely. I mean, as a mortgage broker, sometimes I'm quoting mortgage rates and clients are complaining about a 0.1 or 0.2% higher rate than they got last time, but they've just not experienced higher interest rates. So it's a completely different world now to what it was, pre-2008.
You do get used to kind of getting sucked into like whatever's happening in the market and the economy. And it's quite, how have you kind of going forward, like taking a step back and looking at the bigger picture of things? Obviously what happened back then, everyone's just so involved in what's going on and just being pushed and pulled in the market direction. How have you kind of taken a step back and actually try to look at it from a wider point of view now?
Yeah, it's a good question. I suppose just experience one, and we're in the information age now as well, which we didn't have sort of pre-2008. Social media, forums, all these different things, so just looking at everybody else and kind of getting a point of view on what everybody's doing, and just listen to kind of all the experienced investors and also the new people out there as well. There's so much education out there online as well, and just kind of taking all that information and then just kind of coming up with my own sort of synopsis from it all, really.
Well, this would be a good time to put you on the spot then, Kessar. Come on, let's see. Right,
well, let's go for it.
Obviously, you put information out there. You're good in the social media. You keep people informed, educated, and all that, which is great. I love your content. When do you think interest rates are going to rise, and how much by?
Yeah, okay, that's fine. Well, just a disclaimer, because I am kind of regulated, so this is only kind of my own, my own sort of thinking.
Oh yeah.
I think potentially that they might rise slightly in the next couple of years, but only very slightly. I personally don't think I'm going to see sort of interest rates rise by a lot in the next 5 years. One of the reasons why I'm saying that is like when we're quoting on mortgages for our clients, the 5-year products are so similar to 2-year products. So all the lenders and stuff who have a lot more knowledge than I have, or hope to do, they're kind of hedging their bets on interest rates kind of staying fairly low as well. Because if they thought interest rates were going to get higher in the next 5 years, they'd probably price them at a higher rate than they are just now, like how, you know, energy companies and stuff are doing just now. So the rates between 2 and 5 year products are very similar. So personally, I think they're going to stay fairly low for the next 5 years. But again, that's just my own thoughts on the matter.
Yeah, I think you're right. I mean, the thing is that they always keep talking about at the moment is inflation, isn't it? Like, and it depends on how quickly that they're talking about 4%, but some people are predicting more now, just with what's happening in the last couple of days. That things just seem to be going a bit crazy in all sectors. But like, yeah, I'm like you. I just can't imagine how they could ramp them up by quite a lot. I mean, I think I can see it going from like, what is it, 0.1, they'll probably put it up to like 0.25 or something like that, which is like, is that really going to make a difference to us, like investors? Like, I can't really see it making a huge difference.
Yeah, well, the other thing as well is the margin that the lenders are making on top of that. So obviously they're 0.1 just now as a base rate, but then, you know, the interest rates that the lenders are charging are fairly low as well. So, I mean, they could rise slightly, but interest rates to, you know, to us as consumers might not rise that much. But yeah, I think it'll be interesting because it could stunt growth as well, which is not what they want. You know, they're wanting us to kind of expand just now, you know, in all different, you know, industries, not just property investment. So I think if they increase interest rates too much, that could stunt growth, which is not what they want.
Like you say, people have just
sorry, mate, go.
I said, like you say, people have just become so used to, like, you know, low interest rates, like, you know, ultra low interest rates. I think by increasing them past even 2%, I don't think economy would handle it. So yeah,
I think it'd be a gradual build up to that. That's an interesting way to kind of get onto what made you kind of start to want to become a mortgage broker. Was it your kind of past experience and, you know, and the misfortunes on the financial crash?
Yeah, a mixture of things, really. I've always been interested, especially since kind of 2008, I was interested in how I could avoid making those mistakes again. So started to kind of educate myself on finance in general, and always kind of had an interest in finance. But then when I was investing in property since sort of 2010, I was using mortgage brokers, and a lot of them were older as well. And a few that I'd used, one in particular was actually kind of kept saying to me, you know, have you ever thought about becoming a mortgage broker? Because a lot of us are getting older, retiring, and there's not many sort of new people coming into the market. But that time I was working in family business, and, you know, just couldn't kind of see your way out of that. But once I'd kind of built up a few properties, that kind of gave me that buffer to kind of make a change. I was working in hospitality. You know, we had a restaurant where I was always working evenings, weekends, and I had a young family, and I thought, you know, I'm not getting to see them, you know, when they're, you know, leaving, you know, sorry, at the end of the day or on the weekends and stuff like that. That's kind of the time that I was at work. So yeah, just decided to kind of go into property full time. Wasn't quite sure what I wanted to do first. It was kind of a toss up between letting agency or a mortgage broker, and yeah, decided to kind of become a mortgage broker and just kind of train from there.
Nice. And how did your family react to you moving away from the family business?
Yes, we actually sold the business, so everybody kind of went their all separate, all their separate ways, which was good. You know, a lot of them are still in hospitality. A lot of them kind of got their own businesses now, kind of similar industry. But yeah, you know, I think they were kind of happy for me. You know, we had a tough couple of years when I first became a mortgage broker because it was quite difficult to get into, to kind of start making an income from. You know, I had a few doubts, kind of felt like packing in a few times, but now, you know, kind of don't really kind of look back really. You know, so yeah, I'm really kind of glad that I made that jump.
So what's the kind of hardest part of being a mortgage broker then? What's the most frustrating?
I think starting off for me, you know, because I was self-employed, was getting clients, which was kind of with any sort of business, really. I just thought I'd become a mortgage broker, tell all my friends, family, and they'd all just come running to me. But that wasn't the case. First of all, they didn't see me as a mortgage broker, and I wasn't really sort of credible because I didn't have that experience. So yeah, you know, kind of getting clients in, you know, that was kind of the most difficult thing at first. But day to day, you know, as a mortgage broker itself, I suppose just kind of keeping on top of what's happening in the market, really. Is probably kind of the biggest challenge because things kind of changed, and especially when we went through COVID, things were changing on an hourly basis, you know, never mind the kind of daily or weekly basis, and just kind of keeping on top of that. That's kind of one of the most interesting things about the job.
See, like I've often just felt, just going through the process quite a lot of times, that it just like the systems of the lenders could be so much better and so much more streamlined. Everyone seems to be quite slow. Are you still finding that, or has like COVID managed to kind of help them get their act together a little bit more?
Yeah, not really. No, it's still a very regulated industry. So 90% of our job is administration. So as much as it's a pain for you as a client, giving all those bank statements and other stuff like that, there's a million and one things that we need to do in the background as well. So, we need to actually show that the mortgage is affordable for you and all these kind of other things that you don't kind of see going on. But in regards to lenders, especially us as property investors, nowadays, we're tending to use sort of specialist lenders, especially when we're doing limited company mortgages, and they tend to be manually underwritten. So there's a lot more that goes into those as well, and there's a lot more kind of processes. They are trying to make things easier, but to be honest, there's still stuff like where you need to kind of scan documents in and post things out, and there is kind of a lot of old-fashioned practices that haven't yet been kind of updated.
Do you think eventually everybody will just accept electronic signatures? I mean, I see Stephen, like, he does like numerous trips up and down the country just to sign documents. Do you know what I mean?
And painful, isn't it?
Yeah, it's crazy.
Yeah. I'm a kind of firm believer as well, and you must get a lot of business on this, but if you want to lose weight, you're not going to go to a fat PT, are you? And I always like the fact that you're a property investor and a mortgage broker, and I always find that people in my own network, my letting agents are property investors, the estate agents, that I use buy and sell properties. I like that. Do you find that's helped your business kind of grow very quickly in the last few years?
Yeah, absolutely. Yeah, I think that's one of my biggest sort of niches. Obviously I specialize in property investment. About 95% of the mortgages that we do are for property investors. But yeah, I think that's one of the main reasons why people use me, because I invest in property myself. And the way I viewed it from my own point of view was that I wouldn't be kind of confident doing a job which I didn't believe in myself. I genuinely believe in property investment. I'm really passionate about it. So, and I think, yeah, a lot of people like that as well. So I've got the property hat as well as the mortgage hat.
Aye, no, absolutely. I remember one of my first mortgage brokers, probably back about 2009, 2010, and it was when you saw the opportunities of buying things cheap, and I was kind of trying to push myself and stretch it. And I remember him kind of saying to me like, "Oh no, son, you're pushing this too hard. You're getting too much. This is your third one this year or something like that." And I remember kind of thinking like, "Oh, was this guy's in his 50s, and there's me at like, I don't know, early 20s, taking advice from him." Then after a few months, when I listened to his advice, I realised that I didn't even fucking invest in property, and I'm sitting there listening to him. And I'm like, why are you listening? And the amount of financial advisors you go to that haven't even got a pot to piss in, or mortgage brokers don't even buy buy properties. I just find it really strange that someone can kind of stand on their high horse, or like you say, try and be credible in an industry and not do it themselves, not put their money where their mouth is, and actually do it themselves.
Yeah, it's interesting. Yeah, I suppose I kind of felt like I wouldn't feel comfortable either, being so passionate or kind of specializing in buy to let if I didn't actually invest myself too. Yeah,
I think it really does help. It's like myself for the lettings and stuff like that. You kind of, because you've got properties yourself, you kind of feel like you can talk from experience as well. Yeah, definitely. I think people can relate to that more as well because you've been through the whole process yourself.
Yeah, absolutely. Like, take us back to your property investment then. So what's it you're kind of currently doing, and what's your kind of your main goals in property and what you want to achieve?
Yeah, so kind of snowballed from sort of 2010 when I started investing, and now kind of mainly investing, with limited company. Me and my wife kind of mainly doing buy, refurbish, refinance. To be honest, my main job keeps me so busy with the mortgages. I kind of only do property investment on the side, really. Not actively looking for properties. A lot of the properties luckily kind of come to me now. I do use sources and stuff as well, or sometimes direct to vendor, or even on the open market. But yeah, I kind of been trying to be more clever with property investment now. Buy, refurbish, refinance, more on houses rather than flats, because I've got quite a lot of flats. Not to say that flats aren't great investments, but the majority of my portfolio is flats. To try to diversify, I'm now buying more houses. Got one holiday let, but not really kind of an avenue I'm going to kind of continue to kind of pursue, really. But yeah, mainly kind of houses is my main goal, and just sort of financial freedom really is kind of the main goal for me.
And still niche to Dundee as well.
Yeah, I think I've kind of still got a big enough market there of different types of properties I've not yet invested in, that I don't feel like kind of too saturated in the local area. I suppose if I had kind of loads of properties in the local area, then maybe I might kind of move elsewhere. But I think I'm quite lucky. There's so many kind of different areas that I can invest in, and financially it's quite a kind of sound area as well, or I feel it is. That yeah, I'm going to kind of continue to invest here just now.
Yeah, Dundee seems to be up there with some of the hot spots at the moment for buy-to-let property investing. So if I was a new investor wanting to come to Dundee, where would you say to kind of look? You know, what gives a good return on properties? Would you tell them to just keep going up the road to Aberdeen? Or,
yeah, it's interesting. I think Dundee still gets kind of overlooked quite a lot because it's kind of becoming one of the hotspots, but it's not quite there, compared to other areas. I think most areas of Dundee are good investment areas, and there's a market for rentals in pretty much all areas. So from the low end up to the higher end. So I wouldn't say there's really any kind of bad area to invest in Dundee. Some of the blocks can be a little bit rough, and we don't really tend to have kind of there's not all blocks are factored and stuff like that. So but in general, pretty much all areas of Dundee are good investment areas, I find.
so there's nothing you would say to stay away from? Like,
no, not really. I mean, even some of the rough areas that I wouldn't have kind of gone into growing up, I've now got properties in and actually do quite well. So, sometimes we kind of think, oh yeah, there's certain areas that I just wouldn't kind of invest, but actually they can be decent rental areas.
Is what happened to you and your family back in 2008? Is it made you quite a cautious investor, or is it made you?
Yeah, I think so. Yeah, I think for many years I was just kind of buying and then, would never look to refinance or anything. Tried to kind of keep my portfolio around sort of 60% loan to value as well. So I am a fairly cautious investor. Sometimes I kind of see everybody else and they're kind of going gung ho, and I feel like I should do that as well. But in general, yeah, I'm fairly sort of cautious. Not overly cautious as well. I think I'm kind of in the middle. But yeah, definitely kind of having kind of burnt my fingers in the past has made me more cautious.
Yeah, absolutely. And what kind of due diligence process do you do? Like, what stuff's got to tick your criteria before you invest in something?
Yeah, to be honest, I keep it very simple, really. I basically just work in a property, and if I like it and the numbers work, I'll just put an offer in. Maybe that's right, maybe that's wrong. I'm not sure, but I don't spend kind of weeks doing my due diligence or anything like that.
And is that criteria kind of based on cash flow, or is it based on what money you leave in the deal?
A mixture, really. I don't even look at always at how much money I'm going to leave in the deal. Sometimes if I feel it's a good property, I'll just go for it. If it works for me numbers wise, I'm not always looking to get all my money back out. If I get money back out, then fantastic. If I don't, it will come back out in the future, or there will be kind of equity built in there in the future as well. So I'm not always looking to kind of take my money back out.
Yeah, that's interesting. And kind of what has you got a set size or a set cash flow turnover, or a set kind of where you want to take the property investment to, or is this something you think you're always going to do and just keep plodding away, just adding to it constantly?
Yeah, it's kind of winging it on that as well. I really just kind of, as properties come to me, if I like them, then I'll just go for it. So, I don't have kind of any certain goals. I've got kind of certain monetary goals that I'd like to kind of achieve and stuff like that, but not really kind of built into a process on, how many properties I then need to buy to get to that. I'm just kind of going with it, really, because sometimes you can get stressful because you think, oh yeah, well, I need to buy X amount of properties to get to that as well, and you can force yourself to buy a deal because of that too. So I'm just kind of allowing things to kind of move naturally, really.
That sounds like you're kind of, obviously your mortgage business is your main focus, and that's where you're really trying to drive the growth at the moment. And it's great to have on the sideline, you're just building up that portfolio as well. So going back to the business side of things, where do you see that going, and like what's your kind of ambition for the mortgage business?
Yeah, you're right. So that definitely is my main goal, because I don't want property investment to kind of detract from that either, because that could affect my main business as well. So originally I used to kind of work underneath somebody else as a mortgage broker, self-employed, set up this new business where we're directly authorized with the FCA now since April 2020, and we've grown since then as well. So actually COVID kind of worked well for us as a business. We can continue to kind of grow, taking on staff. There's now 5 of us in the team, looking to kind of just continue to kind of so I've got a lot of good staff that have got a lot of good mortgage experience as well, so for them to kind of grow, to then become advisors as well, and then take on more administration staff. So yeah, as a team to kind of really grow is the main thing.
And what's working for you in terms of like, how do you get your new clients in? What would you say is the number one source of leads for you?
Yeah, definitely social media, because that's kind of where I spend most of my time marketing. But I think sort of as a strategy, just kind of doing content marketing. I don't really kind of sell to my clients. I don't even really say use me. I'll say kind of use a broker, or a buy-to-let specialist broker. If just kind of trying to give as much information away as possible for free if I can as well. And then if they want to use me, then fine. A lot of people will eventually kind of, we live in that information age where people want to know how things work. They want to know how a buy-to-let works, or what the criteria is out there, but not everybody's wanting to kind of go away and do all that themselves, and then hopefully then when they are ready they'll come to me.
And then that's evidence from your social media channels. You can see that you really want to educate people and you want to give away the information. And when a new lender reduces the rates, puts a new product on the market, you're the first one to kind of post it. So I get that information from you more than anything.
Which is fine. And some people get information and go away to their own brokers, and I'm absolutely fine with that as well. I'm not the only person out there. There's lots of other good brokers too. But yeah, I try to kind of try to give the information out as much and as readily as possible. Just keep everybody educated, really.
And what about for people that are kind of running small businesses? Have you got any kind of daily rituals or tips or hacks that like help you get through the day or anything like that?
Yeah, so I mean, I'm no expert by any means. Always trying to learn myself. I'm massively into personal development, always kind of reading books and stuff. I think one of the key goals that I've kind of learned recently was fitness as well. So I think, I was always into kind of like weight training and stuff like that. I lost quite a lot of weight when I was growing up, but kind of put that to the side when I set my business up. But come back to that recently since COVID. And I think that's kind of a big thing that's kind of changed for me, making fitness a goal. And when the fitness becomes a good goal for you, and then that can really kind of transcend into your business as well. And that's kind of helped me business-wise, I think. It's kind of got feel fitter, more clarity, sleep better, all that sort of stuff. It all kind of coincides with each other, really.
Yeah, I often see your social media posts or your Instagram posts where you're out. You do a lot of cycling, or is it mountain biking you do, or is it road biking?
Mixture. Yeah, biking, cycling. Mountain biking, road cycling, hiking, stuff like that. I do it for a couple of reasons. So sometimes just to make people realize that I'm normal as well. I don't always talk about mortgages all the time. And actually, a lot of people kind of like to talk about sort of fitness as well with me. So I get kind of quite, a lot of my kind of clients will speak to me about that too. But yeah, definitely kind of fitness has been a big goal for me recently. Yeah.
No, you like a selfie, mate. You like a selfie.
yeah. Just like you, Nick.
No, that's it. Just like me.
There's no one done a selfie of this call yet, guys.
Oh no, we need to do one. We need to.
Definitely.
Anyway, Kessar, thanks very much for joining us. It's a pleasure as always. You always give so much value, and you're always open, honest, and the kind of open, honest, kind of open book guy, which I really like, and we like getting you on.
Thank you very much. No, thanks for having me.
You want to give a shout out for your social media and your business?
Beat me to it.
Yeah, thanks, guys. Yeah, so my business is Freedom Financial. Just search me up anywhere online, whichever suits you guys best. I'm kind of most active on Facebook, but Facebook, LinkedIn, Instagram. I've got my own website, which is kessarsalimi.com. But yeah, there's loads of different ways to kind of interact with me. I'm sure you'll find me somewhere.
Right. Awesome, mate. Thanks very much. It's been good to get us on your podcast as well. So yeah, thanks for putting out all that good content.
No, likewise. Yeah, thanks for having me on, guys.
Cheers.
Thanks a lot. Cheers.
Okay, guys, I hope you enjoyed that interview. As always, if you could give us a review, that would be much appreciated. Always building up our good reviews on Apple Podcasts. And if you could head over onto our social media pages, Stephen.
Yep, my page is Stephen Clark Property on Instagram, LinkedIn, and Facebook. And what yours, Nick?
I actually got my Instagram was wiped. I don't know, it was wiped. I couldn't get on it for a few days, so I started panicking because I was like, well, I've only got 5,000 followers, mate. Nothing like yourself, obviously, like the big social media guru that you are.
Broke your heart, all that hard work, mate.
So I was panicking there, yeah, but mine's Nick_Ponte on Instagram, and you can tag the Scottish Property Podcast as well. And
guys, check us out on Instagram and share the stories and tag myself, Nick, and Kessar Salimi on this episode, and I'm sure we'll all be sure to tell our stories. Thanks for listening.
We'll be back next week for another thrilling episode of the Scottish Property Podcast.